Welcome back, everybody. Thanks for tuning in again. This is one of the last contrarian voices out there who's not following public opinion necessarily. That has a lot to do with being bullish and investing in Chinese stocks currently, which are, tremendously out of favor. And we're going to discuss what could be possible turnarounds, things that I'm looking to, or my personal interpretation of current events. So that's not investment advice, but it's a different opinion, maybe some added context and additional thoughts to think through for your personal due diligence if you're investing in Chinese stocks or considering it and so on. Currently, the trend is nowhere near of being bullish of Chinese equities. That is one of the headlines that we've just discussed in the Patreon community, by the way. In this community, we talk through lots of things that will be topic in this video on a daily basis. So feel free to join. If you're a 10 USD tier Patreon member, then you'll get an invite to this community chat. And you'll get to discuss this, every day, not just when I manage to have some time to do these videos occasionally. This also helps to support this channel, which is, by the way, not funded by anybody else than our company. That what we're doing, consulting businesses around tech and innovation trends from China. That's all we do. And, currently there's just one big trend, which is NVIDIA and AI. I talked in previous videos about the mighty seven, the big US caps, and one of them is NVIDIA currently. I think we might be down to actually 4 by now. I mentioned there is some risk that increasingly there might be those big caps also losing some favor and losing some steam. We saw what happened with Tesla, maybe Apple. We see some cracks in the earnings, but if you just look at what's happening with NVIDIA, it's really so bullish. Everything's going just up. And some people say, including myself, it looks a little bit bubbly here. But the fact is that NVIDIA's market cap has now overtaken the entire Chinese stock market. So the sum of all of the Chinese market capitalizations, S&P 500 doing very well, above 5,000 points. So everything's great in the US markets. And that's, fair enough. That's great. But I worry that this is just, carried by a couple of few names. And so that reminded me, I did a video the other day on some things that happened during the dot-com bubble. Let's hope this is not the same time. And let's hope not one of these larger caps will be shot after another. But now the topic will be more on, what could help the Chinese stock market to recover. We had more negative news coming out during this week. The inflation print was actually printing negative, so it's a deflation trend continuing here. And in this chart, historic chart, I've just marked the red dots here, which are previous periods in which the Chinese economy was in a deflation mode. So you've seen this is not the first time that it's actually happening. Lots of the media narrative and talk right now sounds like this is now the collapse of the Chinese economy. This is now the end, the Japanification of China, if you will. But if you look at the actual data, it's not the first time that China is struggling with such kind of economic headwinds. It's been during these periods as well. And you can also see that it's always bounced back more into inflationary, and therefore also a hotter economy type of situation. And if we're just overlaying this very roughly here, you can see 1998. This is also when the Hong Kong Stock Exchange was also at its lows. Then again, after the 2000s, we'll see another dip here again, 28, 29. This is when the Hong Kong Stock Exchange also found another bottom. So yeah, there is this trend that the deflationary pressure in the economy is sort of the main trigger here for the stock markets also to tank. So it seems like the investor expectations currently is at what point of time will China come back in full force with a large stimulus and help the economy to get some steam again and also get back into inflationary pressure here. In some of my previous videos, I mentioned that I think my view is, or my interpretation of how I'm just reading it, is that the Chinese leadership currently doesn't think that the Chinese economy is at the verge of collapse and that things are really, really ugly yet. And I also don't think that they want to resonate back to large stimulus in order, for example, let's say money printing or consumer, let's say vouchers or anything that really stimulates the economy in that regard. And if you look, for example, here at the PBOC, they are saying that they are actually already see a modest rebound for consumer prices. That came out at the same day where the CPI report just dropped, which I pointed out that it's deflationary. So, maybe they are still of the view that they can just naturally turn around this with a little bit more time. And this might be to the disappointment of investors why we see such inactivity. However, one point is clear, the stock market is of importance also to the Chinese leadership. We've just seen that Xi basically started to interrupt with the markets here. He has fired China's top market regulator. And as usual, the press is largely spinning this into a negative. Some of the analysts out there see this as another tightening control move by Xi, kicking out somebody who's been responsible so far and replacing him is not the sign that investors would like to see currently. Instead, they're asking the question here, which conditions could actually trigger Beijing's perception that it needs to move beyond administrational controls to more extreme measures. So basically, it's the markets here blackmailing the Chinese leadership into becoming active. My personal opinion is that Xi is becoming active. He wants to get briefed on the markets. He's making actions here in order to replace key personnel, and that's meaning he wants to send some signs. Whether or not this is more about regulating, for example, more some of the short sellers out there or the market manipulators, that remains to be seen. However, if we just look at some of the facts here, previously when this position has made a change, this was also marking a bottom. Previously, Yi Huiman was coming in and, it led to a major rise in the stock market. Now he's being fired, possibly marking also another bottom. Again, we'll see what's going to happen. One reason why I also don't necessarily buy this narrative that Xi replaced the market regulators in order to have tighter control on the markets, and that's his only solution, is one news that wasn't discussed as much, which was actually a total reaction against crackdowns and more regulation, and sending a signal to entrepreneurs, to the gaming industry, after there was a new regulation draft coming out that was tanking Tencent and NetEase stock as a reaction to this gaming regulation coming out, after which actually China removed this video game official. So really the person responsible for this new regulation, that was really not very well introduced. And the fact that after this negative market reaction and then China immediately removing this official from his responsibilities shows me that China is now rather on a path of having less regulation, less oversight. And in my point of view, this is a main thing and theme to watch, and where I personally had conversations, for example, with the CFO of Xinlei, Exnat, who said that the industry, the entrepreneurs, the companies are currently waiting for a signal from Beijing. What it might be, there is no such definition for it, but something like this, such kind of a counteraction that is, to the benefit of the business community rather than to the regulators, I think that's exactly what those entrepreneurs are currently looking for in order to start also, being more outgoing again and ramping up their investment into business. On this matter, we actually saw some positive news coming out this week, which were China new yuan loans. So there is more debt being taken on currently in China. It's actually a record number. You see that this is very cyclical. So maybe in the next couple of reports, this number is going down gradually again for this cycle, but that's usually how it's happened throughout the year. The fact is, though, that there is more uptake in loans currently, and this was actually exceeding the expectations. And this might be already what is currently happening under the hood, that people are starting to become more outgoing again for consumption, for investment into, for example, infrastructure. So the China fixed asset investments has been trending down, but now seems to be bottoming out. So we need to see some signs here. And that, I think, will be connected to more developments from the Chinese leadership that will be taken up by the business community positively. What could this be? I think there is two major events to look forward to. One is the 2 sessions and one is the 3rd plenum. These are high political events. One is scheduled around March possibly, but the problem is in the past these events have been skipped. There's currently not much talk about what to expect from these events and when they are actually happening. And so I think this current intransparency from Chinese leadership and also the uncertainty around when this is going to happen, what will be proposed during these events, not necessarily the big bazooka stimulus that investors are talking about currently, but I think more of such signals that I've shown before. This is currently this uncharted territory where investors are not confident to invest and go long China, and where it's basically a black box for investing. And so that means in the short term there might be still not much confidence and too many unknowns for a substantial rebound. However, these 2 events are possibly coming up in the near-term future, along with possibly a change in the Fed monetary policy. So we're still currently seeing this pushback of the first rate cut actually. So it's really still not happening. Maybe it's even now happening in the second half of this year. And as long as this is the scenario and the case, I think China will not be in a situation where they're going to do, for example, rate cuts themselves, because there might be just too much pressure on their own currency and even more outflow of foreign direct investment. However, after the situation is changing and the Fed ultimately starts cutting rates, I think we're also going to see some of this fiscal and monetary policy measurements by China going to happen. However, at this point, I'm still not expecting that China is going out and just starting to print money and, throwing around cash everywhere, just like the US has done. Instead, I think they're still in this rather slow wait and see, but also supporting the markets currently at these levels, action levels here. So bottom line, what I'm expecting and I'm looking for is more headlines like these. Actually, the news headlines have been turning around a bit more positive lately, in my point of view. We need more stuff like China seeks to ease the industry in different areas. If that's coming, I think that will help for investors and also the entrepreneurs, first place, go out and invest more in their businesses. And that's important. Them taking up more loans, doing more investments and so on. If that's happening, really that's when also the government can come in and support the businesses with more liquidity. Otherwise, if they just flood the market with liquidity, but nobody is taking it up, then even rate cuts and other instruments possibly will not work in the planned or intended manner. And so this is what needs to happen. Unfortunately, this is all in the crystal ball right now. Nobody knows when and if it's going to happen. When will these political events happen and so on? When will the Fed start cutting rates, and when can China also start easing from their side? When these things come together, I think that's when we also will see the rebound that has happened in the past. Other than that, of course, in the short term, it might stay volatile like this with all of the uncertainty that I've described. And so this is unfortunately the situation with some of these investments that we're currently discussing here on the channel. Let me know in the comments what you think about these type of events. Thanks for watching and see you in my next videos.